Good morning, good afternoon, good evening, wherever you're listening to me. Welcome to another episode of Wealth Building Conference. Today is going to be another, amazing day. We're going to be sharing powerful topics that will really help us to build wealth. If you are joining us for the first time, just our usual way of starting the program, we want to know you, want to meet you wherever you're joining. Please want you to type your name and where you're joining from. If you are joining from Canada, for example, just type Canada and put your name. And if you're joining from other part of the country, right, please make sure you type your name and where you are joining from. All right. Again, the program is going to be very interactive because we're going to be asking questions as we proceed in the program. If you have friends, family members, or colleagues who are medical professionals, business owners, immigrants that are looking to build wealth, our breakthrough, build wealth, and also look for, they're looking for financial freedom, right? Please, this program is actually designed for them. Please share the link with them. Let them join us to experience another transformation on how to be financially free in Canada. Once again, welcome to another episode of Wealth Building Conference. Now, just for us, before we start, right, I just want to emphasize is that a lot of us, we are making money, right? But it's just unfortunate that as the money is coming in, you don't know how the money just disappear from your bank account. The reason is because if you don't have a proper budget and plan for your money, right, chances is that you'll be making money and you will not know how you spend your money. What am I trying to say? Please try as much as possible to have a budget for your money, right? Budget will make you to stay on top of your finance. It will guide you on what comes to your bank account and how you also want to expend that kind of money. Because why? I've seen it in many occasions. People make six figures at the end of the year. They have nothing to show for it. So please, as an immigrant, as a medical professional, business owners, if you listen to me today, please, budget is one of the key to financial freedom. You must budget. If you want to cultivate financial discipline, number one thing you need to learn is how to budget. We have a lot of tools that I'm going to share as we proceed in this month of August. So once again, welcome to another episode of Wealth Building Conference. Again, if you are just joining for the first time, please, I want you to please pay attention to this amazing topic I'm going to be sharing today. It's going to be on velocity banking and immediate financing arrangement. Velocity banking and immediate financing arrangement. So if you want to learn or specialize on how immediate financing arrangement works, this particular program is for you. Please take your note as we learn together today. So I'm going to quickly pull up my slide and share my screen to show you what I have for you today. Okay, 1 second. Okay, right. So today's topic is velocity banking and immediate financing arrangement. Okay, the velocity banking method with immediate financing arrangement for Canadian medical professionals and business owners. The velocity banking method with immediate financing arrangement for Canadian medical professionals and business owners. Now, if you agree with me, I want you to type yes in the comment section. You agree with me that if you paying 5% on interest is far more better than paying 40% on taxes. If you agree with me, please type I agree. Okay, let me repeat myself again. Right, it makes sense to pay 5% on interest on loan, okay, or to pay 40% on taxes. Of course, you can also pay as much as 50% on taxes, especially when it comes to passive income. And I'm talking about medical professionals this time around, medical professional, business owners, immigrants that are making six figures. No, once you have a corporation, okay, and your corporation make profit, what you call retained earnings, okay? So the retained earning comes with another special type of taxes that many professionals, they are not aware of. So I'm going to be sharing that today as I proceed with this presentation. So important disclaimer, okay? This presentation is for educational purposes only. It is not intended to provide financial, tax, or legal advice. Results may vary based on personal financial circumstances. Always consult with a licensed financial professional, advisor, insurance broker, or tax professional before implementing any strategies. Please, this is not an advice. Any strategies that you want to implement here, make sure you consult a professional. Because we are talking about complex strategies, leveraging life insurance and debt. So if you are not experienced enough, or you don't consult a professional, okay, please, this is not for you. Always seek financial professionals before you take any financial advice. Why this matter to you? Now, number one, high taxes eat into your income. Now, I've been saying this over and over again, that tax is number one biggest destroyers of wealth. So if you agree with that, please type it in the comment section. Tax is number one biggest destroyers of wealth, right? Unfortunately, people are making money and tax is eroding more than 40-50% of their income, right? So this is why this is matter. Number two, loan interest and credit lines slow down your financial growth. I've seen a lot of people, right? When you check their financial report, you see a lot of asset. Maybe their asset is $2 million, but they also have a liability of maybe $1.8 million, $1.2 million, $1.5 million. This is not good at all, right? So if your asset is not times two of your liability, then your going concern might be threatening as a financial advisor, as a medical professional, as a business owner, right? So why this matter to you? Because the interest you pay on line of credit and other loans is low down. It actually eats your income. Many professionals don't understand how to leverage debt smartly. If you read one of my favorite books is Rich Dad Poor Dad. Okay, and why I love this book is because Robert Kiyosaki, exposed us to how you can leverage on debt to grow wealth, right? And this is the care must be taken anytime you are going into debt. You must appraise it very, very well, right? You must take serious caution before you leverage on these strategies. If you're not comfortable with debt, if you're not really believe in leveraging debt to build wealth, right, this is not really for you. You make great money, but your money is not working hard for you. Now, if you are making so much money, but you don't know how to leverage on that money to build wealth for you, it's not how much you make, right? It is how much you keep. And it actually starts from managing your debt very well, managing taxes. Okay, these are the two things that you need to know when you are building wealth. And I see medical professionals making $300,000 or more, yet living paycheck to paycheck. I've seen that, right? So don't think that if you are making $500,000 in a year, $300,000 in a year, $200,000 in a year as net income, right? Chances is, I've seen many people are still living paycheck to paycheck. Why? Because they don't understand how to manage their money, right? It's either they are paying so much on taxes, it's either they have so much debt that they cannot really, and the interest they pay on those debt is actually eating the income, or they don't even know how to invest their money, right? If you make so much money and you don't know how to invest the money to generate further passive passive income for you, it might be a very big challenge for you to build wealth, right? So take note of that. Let's look at the concept. Now, let's look at what is velocity banking in 60 seconds. Number one is a strategy that uses cash flow plus credit lines to pay debt faster. Now, see, if you have if you have a line of credit, so it's a strategy that combine cash flow with a line of credit, and I'm going to use this like, I'm going to use this how you can combine this with immediate financing arrangement to build wealth fast. All right, free up more cash to invest, save, or grow your business. Now, these strategies will help you to invest and save and grow wealth very fast, and of course help you eliminate interest over time, not just make minimum payment. If you apply the concept of the rule of 72, okay, if you take a loan, right, and you are paying, for example, if you have a credit card debt and you are paying 18% on as interest, okay, if you divide it by 72, it probably take you 4 years, whatever you are owing on credit card, to pay it back. If you are paying minimum payment or you are not paying it at all. That is how debt can quickly kill your business. That is how debt can quickly kill or derail your business. Many of us don't take note of this, right? Debt is good, but any debt that does not generate further income, any debt that is not rightly used to build more wealth, is not a good debt. For example, you are having a lot of credit card debt, like a lot of line of credit that you are using on something that is not bringing more income, then you need to be very, very careful, right? It's not about how much you earn, it's how you flow and use it. Now, that is why I first mentioned this in the beginning of the program, that budget is very key when it comes to building wealth. You must learn how to make sure that you budget your money very well. Budget will guide you, will tell you the direction of how much is coming in and where that money goes. A lot of us, the money is coming in and you don't know where your money is going. You don't have an income problem. It's just because you don't have a proper budget in place, right? So if you are struggling with that, there are so many apps, right? YNAB is there. There's Mint is there. There are so many apps that you can use to actually, have a glance of what your budget look like. Now, let's continue. Using immediate finance arrangement to supercharge wealth. What is immediate financing arrangement? Number one, you buy a permanent life insurance policy. So this is not a term insurance policy, right? We're talking about permanent life insurance contract. This is the first thing that you need to know. You must have a need for permanent life insurance. You must be in good health, right? The first thing. Number two, a bank lend you up to 90% of your cash value. There are two ways to do this, right? So that's what we call corporate owned life insurance policy. On that one is set up on a corporation. Okay, a corporate life insurance is that type of insurance that is set up on the corporation, where the owner is going to be the corporation. The payer is going to be the corporation. The beneficiary is going to be the corporation, while you as a medical professional or business owner will be the insured, right? So the benefit of that is that whatever you pay on that life insurance, okay, if it is set up on a corporation, meaning that the premium is coming from before tax dollars, right? So you are paying the premium before every tax dollars, okay? Please take note of this. If you are paying the premium before tax dollar, they have not taxed the money before you use it to pay the premium. It means that at the end of the year, that's what we call add back, right? The accountant add back all what need to be taxed, and the taxes at a corporate level. Let's say, for example, they are taxing at a 20%, 13%. So it means that it's a massive saving for tax, for tax, right? So if you are paying, for example, 12%, 13% on taxes, it's a massive saving for you when it comes to tax planning. Okay, that is the first way of setting up immediate financing arrangement. The second one is after tax dollars, right? After tax dollars. So meaning that whatever profit you make at the end of the year, they tax it at whatever rate. The tax is 12%. So which means that you want to invest, all right, the retained earnings. Okay, so take note of that. Pre-tax and after tax, right? So if it is pre-tax, meaning that they're going to tax it at the end of the year, okay, whatever taxes you are paying on your corporation, that has to be taken care of at the end of the year. But if it is after tax, right, meaning that whatever profit you make at the end of the year, your CRA have already taken their cut 12%, 13%. Say, for example, you make $500,000 in a year, right? And your expense is $200,000. The remaining $200,000 probably taxed at 12%, 30%, right? Whatever that is remaining is what we call retained earnings, right? So that retained earnings, it can also be used to set up immediate financing arrangement. So whatever you put there is automatically tax-free. So you don't pay tax on that. That's the strategies. So imagine that. Because why? If you invest your retained earnings, there's what we call passive income taxes. Okay? Once you make a certain amount of money, your income, your tax all jump as much as 50% on whatever you make at the end of the day. You can imagine you can imagine the kind of tax you're going to pay on the passive income. So it's very key that you understand how do you build wealth, right? This is built for smart medical professionals, business owners, immigrants that have businesses. It's very, very important. Now, so let's say, for example, all right, you are putting $50,000, $100,000 on that cash value life insurance policy contract in a year, right? You can actually take 90% of that back, right? So it means that you have access to immediate liquidity. And one of the problems that people see in life insurance policy contract is because it will take time before they can have access to their money. So with this kind of arrangement, you can have immediate access to your money. Let's say from year 2, okay? Step 3, use this loan for investment, businesses, expansions, or real estate. So imagine, say for example, you set up a life insurance policy for, let's say, $1 million, and you are paying $100,000 into that policy, or $50,000 into that policy as annual premium, okay? Annual premium. So it means that as you are putting the money in, okay, you also have access to that money immediately that you can use to buy businesses, to invest in real estate, to also buy, to do whatever you want to do. So imagine that. Okay. And again, step 4, interest on loan may be tax deductible. Let me explain this to you very well, right? So if, for example, you take $100,000 as policy loan from your permanent life insurance contract, and they are charging you 5% on that loan, right? So it means that interest, let's say, for example, at the end of the year, whatever the interest you pay on that is $10,000. It's also deductible to your corporation. It's also a tax savings. So what are we trying to say here? What am I trying to say here? I'm telling you the smartest way to save on taxes. Okay. Now, you may ask me, why do I have to take loan? Well, the reason is because 5% on interest is far better than 40%, 30% tax is going to pay to CRA. So just use your head and think about that, right? 5% is far better than 40% taxes. Again, perfect for incorporated doctors, dentists, and high income business owners. So this is not just for any person, right? It is for high income earner. As a matter of fact, it's not meant for people that are not making good money, right? It's meant for people who are making a lot of money as retained earning from their corporation. Now, why they work better together? Velocity banking plus immediate financing arrangement is a strategy, is a game changer for you as a business owners and medical professionals. Number 1, cash flow control. Velocity banking creates cash flow control. Now, what it means for you is that it will help you to create cash flow. What is cash flow? No, cash flow means that you know how much is coming into your business and how you can channel those money to various investment, right? Cash flow means that every month, every year, you know how much is coming in, and you can structure that kind of money for whatever things you want to use it for. If, for example, you are going to a project, you are going to a real estate project that will cost you maybe $200,000, $300,000, and you are planning to do that in the next 3-4 years from now, right? You can put up a immediate financing arrangement, all right, and say, okay, I'm going to be putting $100,000 here, and this $100,000 here is actually going into real estate investment for me, right? You can see that it will help you to guide, to know how to properly structure your cash flow. Number two, immediate financing arrangement let you leverage life insurance to build a family bank. If you have not heard about this, I want you to go and read about Rockefeller. Okay, Rockefeller is one of the billionaires, right? One of the world billionaires that leverage life insurance, private life insurance contract to build wealth. What it means is that he actually used life insurance to create a family bank. And you can also have your own family bank, all right? What he does is that he bought a permanent life insurance on all the family, and he actually make sure that the beneficiary of that particular contract is the trust. So meaning that for every members of the family, every member of the family, they have a life insurance contract. And that life insurance contract, the beneficiary is attached to the trust, meaning that the money coming in, as they are paying benefit, the death benefit is paid to the trust. So it means that you cannot change it. And that trust continue to create further, build wealth, buy real estate, fund children educations, and all of that. So if you want to set up your own family bank, like after this, I'm going to share my QR code to set up your family bank consultation with me. I'm going to show you how you can also have your own bank. Look, the fact still remains that what the bank is telling us to do is what they are using your money to do. Go and check. I want you to go and do your research. Big banks in Canada, in United States, they have a lot of money on permanent life insurance. It's called BOLI, Bank on Life Insurance. Unfortunately, immigrants like you and me we don't understand. We don't know how to do this. And I'm just telling you today that it is possible that you can also set up your own family bank. It's very easy, and it does not really matter. You don't need to start with a lot of money, right? Start with whatever you have and continue to build that. What it means is that just buy a permanent life insurance on your name, buy on your wife and all your children, and make sure that the beneficiary of that particular life insurance is a trust. Okay. Number three, combined benefit. It combines, they help reduce tax, speed up wealth building, and protect your family. Let me give you an example of a medical professional that I met last year. Okay, late last year, I met these medical professionals, and when I asked him, how much are you paying on taxes? He said probably around $100,000. I said, wow. And I asked him, how did you structure your business? Number one, this particular medical professional does not incorporate his practice, right? Number two, he does not have a strategies in place to save on taxes, right? So what I did with him was immediately I introduced, because we work as a team, right? We have an accountant, a CPA, we have a lawyer that also help us to develop trust agreement. We have real estate professional that help you to look for very good investment properties. If you want to go into real estate, we have experts that handle that. So we have also a mortgage agent that also help you to look for a very cheap mortgage if anytime you want it. So I introduced him to my one of my team who is a CPA. We incorporate his business. Okay, we put up a corporate life insurance, and we set up registered retirement plan for that particular medical professional. Honestly, this year, this doctor saved $12,000 that we reinvested back into tax efficient strategies that also build wealth for that particular medical professionals. If you don't know, you don't know, right? What we are trying to show you here today is how you can build wealth. You are not just saving. you are building a financial system. Okay, if you are working so hard and you don't have strategies in place to build a financial system for yourself, right, you have not really, you have not done well for yourself, right? So let us try as much as possible to learn. Especially, don't be too busy not to look into your finances. Don't be too busy to start thinking about your retirement. You're a business owner. You don't forget that you are not you don't get pension. So this is the only way you can build wealth for yourself. Plan for your retirement, right? Be thinking of how you can also start generating passive income for yourself, right? You cannot continue to go to clinic all the time. A time will come, you'll not be able to do that. So if you don't go to clinic, I was speaking to a medical professional. He said, Mr. Fashola, we cannot do without going to clinic for 2 3 days. It's going to be no doctor can do that, right? So if you don't want to do that, it is important that you start a side hustle. Okay, look at how you can build passive income, right, that can generate enough money for you before you retire, so that you can work at your own terms, right? I've seen a lot of medical professionals, they have a lot of investment, real estate. They have a life insurance policy. They have a lot of things that they put their money in order for them not to just, they don't just want to continue to work and work and work and work. And I've said it earlier that for you as a medical professional and business owner, at least you must have 4 ways of building your retirement. Number one, you must have a little bit of pension. Pay yourself salary. Pay yourself a little bit of dividend. Number two, right? You must have at least invest in real estate. Very, very important. Okay. Number three, buy a little bit of stocks, shares, bonds, ETFs. These are make sure that you work with financial professionals that will help you to look for stocks that are doing very, very well based on their historical projections. They're going to look for a very good stocks for you that will help you. We have a team of advisors that can help you to do that. And the last one, right? You must have at least some form of permanent life insurance contract that will help you to also generate, tax-free income for you when you're retired, or pay you when you are sick or you're unable to go to clinic, especially if the critical illness happen, right? So let's meet Dr. K, right? Let's look. This is a case study of a medical professional. Now, this medical professional make an average of $250,000 annual income, right? And let's say this particular medical professional has $300,000 in debt on mortgage and line of credit. Okay, how will this medical professional quickly pay off debt and free up a lot of cash, right, to build more wealth? So when you use velocity banking to eliminate line of credit in 14 months. So we bought a permanent life insurance of $50,000 annual premium. Now, don't forget that this particular person can borrow up to 90% of the premium, right? So every year, this particular medical professional is taking a $45,000 loan via immediate financing arrangement. Now, the advantage of this is, number one, okay, this particular medical professionals have a permanent life insurance. So you just use one stone to kill two birds. You have a permanent life insurance that is already set up, right? Meaning that if life happen, right, this particular medical professional doesn't have to worry about how to pay off, children's school fees. If he has a lot of money, retain any in the medical profession that may trigger taxes, or maybe he has another investment, right, that can, trigger taxes. He has a lot of money to pay that. Again, let me tell you this, right? You as a medical professional, you build wealth. Business owner, you are building wealth. You are buying real estate. You are buying investment. Don't you know that those investments will also trigger tax at death? Let's say, for example, you have 5 houses, right? Investment houses. Aside your primary residence, any investment, any houses that you have in this country today, you're going to pay capital gain tax on it if you sell it. Did you take care of that? Do you think of that when you are building wealth? So that is why you need to open your eyes. So immediate financing arrangement will help you to do all of this, right? So imagine you put $50,000 in, you take $45,000 out back to pay down your mortgage faster, and the line of credit you take on your medical school. plus the 5% you are charging on that is also deductible to your corporation, meaning that it's also reducing your taxes. Imagine that. I want you to understand one thing, that to build wealth, right, it requires strategy. It's a strategy. If you don't know, you don't know, right? Use it for down payment on rental property. Now, you can also use that kind of money for down payment for rental properties, right? You can use it for rental properties, and that rental property will also continue to generate further income for you, right? The result is lower tax bill, higher net worth, secure retirement. And you know what? In future, that kind of strategies can also build wealth for you, because at the end of the day, let's say for example, in the next 10 years, $45,000, $50,000 in a permanent life insurance contract, that's $500,000, right? That $500,000, right, you already take that out as well. You have already take the money out, plus the money is sitting out in a permanent life insurance contract, continuing to gain compound interest between 6 to 8% every year. And that one can also use to build wealth for you when you retire. That kind of money, okay, is also tax-free. Plus, when life happens, that the death benefit pay directly to the capital dividend account. Of course, we have lawyers that will help you to draw a trust, that the money will flow to different quarters, that you don't need to worry about everything you build. See, I'm just excited, and you can see the passion in me, that I just want to educate people on how to build wealth smartly in Canada. Canada is one of the countries that face higher taxes, okay, especially as a medical professionals and business owners. So you must understand that you must learn how to build wealth. Honestly speaking, if you don't know how to save a lot of money from taxes, you'll be leaving money on the table for CRA. And I want to please encourage everyone here today. Please try as much as possible to learn how to build wealth. Smart leverage changed her life. I told you of a medical professional that I met last year. All right. That this year alone, he has saved $12,000 on taxes. Imagine that, right? Imagine if you are saving $12,000 on taxes every year, that money can be routed to another income producing asset, right? You can use it to income producing asset. What about your children education, right? Because as a medical professional, as a business owner, you may not be entitled to government benefit. So you need to plan for that. These are the things that you need to know. Now, what is in it for you? Key benefit for you. Number one, pay off debt faster. Accelerate debt reduction through strategic cash flow management. Now, I've told you about how you can use immediate financing arrangement with Velocity Banking. Now, so it will free up a lot of cash for you, right? Cash flow means that you have structured way of what is coming into your inflow and outflow. A lot of us don't know how to do that, right? As a medical professional, as a business owner, at the beginning of the year, you must have a cash flow projections, right? How much is coming in every month? And you can do this. Let me give you how to do this, right? Based on your last year income, right? You can project, right? Your last 12 months, you can use that to project for your cash flow, right? In January, how much coming in January? What is the expenses in January? You must know the net income. This will help you to project, especially if you are going into project. You should know, like, you must have some kind of information at the tip of your finger hand. Like seriously, your accountant cannot do everything for you. I've said it over and over again. Your accountant cannot build wealth for you, whether we like it or not. Okay, your accountant can only make your books look so good in front of CRA. They can build wealth for you. It is your responsibility to sit down with advisors and help you, show you different strategies that you can use to build wealth. I've said it earlier, right? You need to buy a little bit of stocks, right? You need to set some money aside for pension. You need to buy some form of real estate. you also need permanent life insurance. Right? If you don't want to go into the stress of real estate, maybe putting house for rent and all, you can do real estate investment trust. So put the money in a company, trustworthy company that have credibility, company that will be doing well over the years. Put the money there. It might be small. Just start something, don't delay. Start with whatever amount you have and let them continue to manage that for you. And every year, whatever interest that come from that or profit, reinvest that. It is very important. Don't wait. Your accountant will not do that for you. You have to work with financial professionals that will help you to do that. Number 2, increase liquidity. Access cash when you need it without selling investment. See, a lot of us as a medical professionals, business owners, immigrant, anytime you need money, you just have to sell investment. It doesn't need to be, you don't need to do that, right? As a matter of fact, your life insurance permanent contract can become your bank. You can go to your bank and pull out money and buy whatever you want to buy. A lot of us don't even know that you can turn a life insurance permanent contract to a bank. And this is possible through immediate financing arrangement. 3, access capital for investment. Leverage existing asset to fund new opportunity. For example, you have real estate investment property. Okay, you can pull money out of it, right, to fund your immediate financing arrangement. So these are, because a lot of us house rich, cash poor. We have a beautiful houses, but you don't have money. How do you do that? Work with professionals that can help you to do this. 3, 4, protect your legacy. Ensure wealth transfer efficiently to the next generation. One thing that I want you to know is this, right? When, as a business owner, right, one of the things that we lack, especially as immigrants, is we don't know how to pass down generational wealth, right? Some of us, we have a business. Once the business owner passes, that marks the end of that business, right? Or some people, right, they have business, okay, once they are sick, that is the end of that business. It shouldn't be so. There must be legacy planning. Work with lawyers, okay, estate planners that will put a strategies in place to make sure that whatever you have worked so hard for pass down to your generations. Some families, after the first 2 generations, they are no more. They don't have money again. I've seen that in my country very well. Wealthy people, they left their children, they can't manage that money. Why? Because there is no proper estate planning in place to ensure that that wealth continue to multiply. We can do that, right? You can become a channel, a vessel to other people out there in such a way that your wealth will continue to multiply. How do you do that? Just work with the financial professionals, right? Lawyers, accountants, and insurance advisors that will put the strategies in place to make sure that you pass down those wealth to future generations. If you agree, say, I agree. Okay. The next one is reduce your taxable income legally. Structure finances to minimize tax burden. One of the very powerful tools to save on taxes is life insurance. And I've mentioned it before, there are ways to do that, right? If you set up a life insurance on your corporation, it's a massive saving. For example, right, you are paying $10,000 on life insurance policy, okay? $100,000 on life insurance policy before your tax dollars, right? That $100,000, right? If you use that to set up a corporate owned life insurance, that 100K enjoy corporate taxes of 12 to 13%. Imagine that. If you pull that money out as dividend, you're paying roughly about 30-40% on taxes. If you withdraw that money as salary, you are paying 30-40% on taxes. Use common sense. I don't understand. Some people, they would like to, how do I use life insurance to save on tax? I'm just telling you that right now. If you agree, type I agree. You just need to understand all these simple strategies. Life insurance is a powerful tool to save on taxes. Okay, put your money on tax efficient strategies. If your income is high, set up an register retirement saving plan. At least you're going to pay the tax later, but you enjoy your money right now. Before you do that, check your my CRA to know what you can put in so that they're not going to penalize, because it has maximum. It has the maximum of what you can put in, right? Last one, grow your business with your bank, not there. Create your own source of capital for business expansion. Guys, let me tell you this, all right? Honestly speaking, if you want to build massive wealth, please build your own bank. How do you do that? Set up a permanent life insurance, okay, and use that to set up your own bank. And when you do that, please make sure you use your corporation, okay, to set it up. All right. Once it's set up on your corporation, make sure that the beneficiary of that corporation is a trust, so that they will not divert the money. I've seen many cases, right? They set up a life insurance because the beneficiary is not a trust. People divert the money, right? They just divert the money. So, but in this case, right, what Rockefeller did, it was to set up a life insurance and make sure that the beneficiary of that life insurance is a trust. You can also do that. You can do that. You can do that. Very simple and easy. Set up your own bank instead of you to go to the bank, right? Because why? If whatever you save in the bank, imagine this, right? You save money in the bank. You save money in the bank, and the bank is giving you 0.01%. That same money, because bank is not, they are not expected to keep more than certain percentage of your money in their vault. So they now use that same money. They used to give you credit card and they are charging you 18%. I don't get it. I don't understand. And you take that credit card, your own money, and you are paying 18% to the bank. See, it is strategy. You just need to understand education. See, what they don't teach us in the university is financial education. And unfortunately, a lot of us fall into that trap. We don't know. People see that somebody can have a PhD, a professor in finance, but still not financially literate about money. When it comes to money, they don't teach money in school, right? You learn money through all this, this kind of a webinar, right? Read books, attend webinars, attend seminars, right? Attend finance series where they talk practically about money. It's very important. Just look at that example. You put your money in the bank, you put 100,000 in the bank, they're giving you 0.01%. That same money you put in the bank, you go and take line of credit and they're charging you 7-8%. Your money. Why can't you set up your own bank? Use that same money, set up your own bank, and go there, borrow from that your bank, and use it for businesses. Buy businesses, acquire more businesses, use it for whatever you want to buy real estate. Honestly speaking, immigrant, we can be extremely rich. Again, there must be collaboration. Let's collaborate. It's very, very key, right? I have a business strategist, acquisition expert in my team that help business owners and medical professionals to also acquire more businesses. So if you are looking to buy franchising, you want to go into buy businesses, you can reach out to me after this presentation. Who benefit most from this? Medical professionals earning $150,000 plus and above. If you are earning more than $150K in a year, this strategy is for you, right? Once you are earning $150K plus in a year, you need to have your own bank. You can use Velocity Banking plus immediate financing arrangement. Everybody put it in the comment section. Velocity Banking and immediate financing arrangement. If you have any question, please drop it in the chat as I'm running up. I'm going to quickly attend to your question. Business owners with cash flows and debt. Now, if you are a business owner, right, and you have very, good cash flow. Let me just give you another what cash flow means, right? Your inflow. net all your expenses, okay, the net outflow is what we call cash flow, right? And you must see that every month by month. So you must do that projection from January to December. If you want to do that, you can contact me after this meeting. If you're struggling to do that, right? We have team of advice, team of CPA that handle that for our medical professionals and business owners. Anyone with permanent life insurance or you're considering it. So if you have a need for permanent life insurance, this is also for you. Those planning retirement or investing in real estate. I've said it many times that you don't need to go and tie your money down for down payment when you're going to real estate. Okay, set up your own bank, right? Put your money in immediate financing arrangement, okay? Borrow the money back from immediate financing arrangement at 5%, go and put it down as a down payment. So in that way, you use one stone to kill two birds. You have a permanent life insurance that is growing tax-free for you. The death benefit also pay out tax-free, plus you have immediate access to your money to go into real estate or whatever you want to do, use it for, okay? If you are paying too much tax and you want access to capital, this is for you. So if you are paying so much taxes, like crazy taxes, and you are looking for can I do this? Like, this is actually for you, right? Want to see how this applies to you? Number one, you need to book a free clarity session with me. It's a free call. It comes with no fluffy, just exact strategies the way I used to help my medical professional. I'm going to walk you through financial clarity, understand exactly where you are and where you're going. So we're going to crush your cash flow statement first, right? We're going to draw your 12-month cash flow, right? Based on your last financial report, okay? Now, once you do that, we will look long-term protection, safeguard your asset and family future. We also need to look at all the assets you have, like, you want to know how many real estate you have, what is the worth of the real estate, okay? Or other assets. If you if you have a lot of money on real estate, you have stocks, you have bonds, right? Those kind of assets will trigger capital gains at the end of the day. So we want to look at the numbers and calculate what is the likely capital gain tax that you're going to pay at the end of the day. So based on that, right, we're going to use that to project and build, immediate financing arrangement for you. Wealth acceleration, speed up your path to financial independence. Now, this will also help you to speed up financial independence. I've seen people struggling on how to build wealth. Reason being that they don't know. They don't know what to do. They have money, but they don't know how to set up their own bank, right? They're actually using the traditional banks to build wealth. Rockefeller did not use traditional banks to build his wealth, right? He set up his own family bank. And today, Rockefeller is still one of the richest. So you can also be like Rockefeller. Build your own bank. Set up your own bank, right? You can't control what you don't understand. Like, you can't control it. So let's fix that today. So velocity banking plus immediate financing in the wealth formula. Now, smarter cash flow and faster debt reduction. So this will help you to build a very smart cash flows with a debt reduction. If it combined with immediate financing arrangement, leverage permanent life insurance for investment capital. Together, they give you liquidity, tax efficiency, and generational wealth. And this is the dream of every family, right? Number one, they want immediate liquidity. They want money for their, clicking expansion, business expansion, acquisition of many businesses. Of course, they also want a strategy that will help them to pay less taxes. I'm not saying we should not pay taxes, but if you have a strategy that will help you to save a lot of money from taxes, why not do it? And of course, you want to also live well for your family. You don't want to work so hard, and at the end of the day, your family is still struggling when you pass, right? So book a free consultation call with me to show you how this strategy works. So now, if I have any question here, let me check. Okay. So just what we are trying to say here is that the summary of what we're trying to say here is, number one, the immediate financing arrangement, right, is a strategies that combine a permanent life insurance plus immediate access to liquidity. Okay, so you have a life insurance policy. Okay, the life insurance policy, you set it up on, if don't forget that we're talking about high tickets right now. We're talking about business owners that are looking to build wealth, to have access to immediate cash, right? So number one, you must have need for permanent life insurance. So you set up a permanent life insurance contract. Okay. Number two, all right, for you to use velocity banking, right? So you borrow, okay, you borrow your contract, your premium, right? So whatever you put into the life insurance permanent contract, okay, you can have access to that money immediately, right? Let's say, for example, you put $100,000 into the permanent life insurance, you have access to that $100,000 life insurance contract policy, okay? That that $100,000 for business expansion, for real estate. Three, you can also claim interest. So the interest you pay on those contracts is also tax deductible to your corporation. So what am I trying to say here is that anything you pay on those premium, all right, whatever you pay on the policy in terms of interest, because you are borrowing your premium back, and you're going to pay about maybe 5% interest, right? It is also deductible to the corporation. Okay, number one, let me summarize again. Number one, you must have a need for permanent life insurance. You set up a permanent life insurance on your corporation. The corporation must be the payer. The corporation must be the owner. The corporation must be the beneficiary. Okay, and that beneficiary, the death benefits go pay to the capital dividend account. Of course, the lawyer needs to draw a trust agreement on that death benefit. Number two, you must have immediate, you can have access to whatever you put in terms of premium. Number three, the interest you pay on it is also tax deductible to your corporation, right? So those are the three steps, all right, for you to set up immediate financing arrangement. And if you want a clarity call, all right, I can definitely just share my QR code here in order for you to book a free strategy call with me, right? So you can book a free strategy call with me. Just clarity session. I'm going to walk you through on how you can set up your own family bank. You don't need to use traditional bank to build wealth, right? You can actually set up your own bank to build wealth, right? So if you have any question, please, I want you to please put in the comment section. If you have any question, please put it in the comment section so that we can quickly, address your question. Any question, please? Any question? I want to thank everyone so much for joining today's presentation. It has, this is a fully and packed presentation. Next 2 weeks from now, okay, on the 19th, the third week of August, I'm coming up in a lawyer is going to be in the house to discuss on how you can set up a trust, okay, on your corporation, how you can use immediate financing arrangement, and how to use that to set up a trust. So you don't want to miss that session, right? Please block your calendar. It's going to be the third week of August on Saturday like this, 8 p.m. I'm bringing an expert on trust to come and talk to us on how you can use life insurance to create a trust for yourself, how you can use permanent life insurance to set up your own family bank and use it to create trust. So on that note, I'm going to bring this meeting to a close. I want to thank everyone who has actually joined this program today. Every month, every week, we used to educate ourselves on how to build wealth. I'm always like, sometimes when I meet people and they are paying crazy on taxes and they are making so much money, but they have nothing to show for it, I'm always like, I feel bad about it. And that is why we are giving all this information for free. So again, if you know any medical professionals or business owners who are looking to grow wealth and is paying so much on taxes, please tell them, like, we have a solutions for them. We have experts that will work together. We have a team that is going to help us. We have a CPA, lawyers, mortgage advisor, real estate advisor that will help them to build wealth, tax filing, cash flow projection, business plan, any form of service they might need, we are ready to provide it for them. All right. So on that note, I'm going to bring this meeting to an end. Thank you so much for joining. See you next week, and bye for now.